Welcome back, fellow traders, to a new video of Timo trading techniques. In today's video, we will explore a new and very simple, easy to apply trading technique with only one indicator, the whole suite. We will also be testing out the strategy in a live backtest at the end of this video to get an idea about what profits to expect. Without further ado, let's dive into the strategy and see what is it all about. First, we add the indicators for this strategy. We go to TradingView and click Add Indicators. We then type whole suite and add it to our screen by clicking on the first result, buy in silico. Once added, we open settings of the indicator and change the length from 55 to a 100. We also go to candles. This is to the right of indicators in TradingView located on top of our screen. We change our default candlesticks to Heikin Ashi candles. We are now ready and prepared to execute the technique. We will start by taking an example of a long position. To find a good entry position, it is important to keep a few steps in mind. Step 1. Identify the support and resistance zones before we can take a position. We first have to identify the support and resistance zones based on past price action. These are zones where the price reverses or bounces back. In this example, we see such zones depicted by orange boxes. As we can see, these zones act often both as support and resistance throughout time. You can identify these zones by looking for past price highs, and price lows happening on certain levels multiple times. By doing this, we have a more than fair chance price will reverse when price approaches these levels in the future. Step 2. Take a long position after we have identified our support zones. We look out for green candles, while at the same time are above the whole suite. The whole suite should also be green, which means the market is in an uptrend. If these conditions are met, we are ready to take a long entry position. Step 3. Determine our stop loss and take profit level. When we have taken our entry position, we place our stop loss a little bit under our first support zone of the current price. This way, we are at least protected by one barrier. We then place our take profit level twice as high as our entry and stop loss distance. In other words, we employ a risk-reward ratio of 2 for this strategy. When we glance at our example, we see this not only working one time successfully, but twice, resulting in a nice compounded profit. I also want to mention the optimal time frame for this signal strategy. After many weeks of backtesting this strategy thoroughly, we come to conclude that the 15-minute time frame works best for this strategy. You may be asking yourself if this strategy is profitable over a long period of time. We will see in a moment if and why this strategy really works by doing some live back testing over a longer period of time after we have watched a short example. But first, if you are wondering on which platform is best to do this signal and other strategies on, then I can highly recommend you Bybit, one of the top cryptocurrency exchanges in the world. Bybit is safe, secured, and transparent. Be sure to click on the link below. You could also receive a nice bonus of up to $30,000, so you could try the strategy out for free. In the next example, we will study a short position. The steps are the same as for a long position, but in reverse. First, we look for resistance zones. Once drawn, we wait until price is under the whole suite and a red candle forms. If this also accompanied by the whole suite becoming red or going downwards, we enter the market in a short position. We carefully place our stop loss above the nearest resistance zone above our entry position and place our take profit with a risk-reward ratio of 2. As we see in this example, we made 3 entries, all of them profitable, which again leads to some very nice gains. Now we finally put our technique to the test. I will also, as usual, fast forward so we can see the results more quickly. In a period over 9 days, we took 30 positions. 18 of those were gains, and 12 were losses. This means we made a very nice profit of 24 risk units. This number is calculated by taking our 18 wins times 2 minus our 12 losses because we took a risk-reward ratio of 2. If you were to risk $100, every trade with, say, a bankroll of $2,000, we would have gained a staggering $2,400, more than double our initial amount. If we were to apply this technique consistently over a period of a month, we could gain our initial bankroll 6 times over. And the best part of it all, you could do it too, just by following the steps explained in this video. I want to thank you for tuning in, and I'll see you soon with more profitable and easy techniques. Also, if you like our content and want to see more of these trading strategies from Timo Trading Techniques when they are posted, please click the subscribe button below.